because it was a comparison of Canadian banks to European banks, and clearly you don't think that's an adequate comparison. But this is all being brought about because of European banking risk. And tell me, do you think that the markets have a really good sense of the domino effect or the counterparty risk right now that banks, not in Canada, but all around the world, have with the European banks?
Okay, this is a really good point. 2 days ago, some of the largest banks were called to the Federal Reserve Bank of New York, and basically the Fed was asking, do you understand your exposure to European banks? What if, let's say, 10 of the 91 systemically important banks in Europe fails? What's going to happen? And there's all sorts of counterparty linkages, and I'm not even convinced that the U.S. banks understand what their exposure is, and it's probably the case that the Canadian banks need to do some work to figure out what that exposure is. Indeed, I would hope that they are unwinding or buying insurance for some of the exposure to the most banks that are at extreme risk in Europe.
Can you give me a sense of what you think might happen if, one or two or a few banks do have some sort of credit crisis, liquidity crisis, how that might unfold over here in North America?
Well, I think the first thing that would happen in Europe, that the ECB would probably come in, bite the bullet, and basically monetize some of those banks. But if it goes beyond 2 or 3, then we're in serious trouble because the ECB and the European Stability Fund just does not have the capital to deal with potentially a $1 or even $2 trillion situation. Then everybody's in trouble. We get kind of another global financial crisis. And let me say one thing. We talk about tangible common equity. Maybe it's not 3%, it's 10% with quality. But even 10%, that is a leverage ratio of 10 to 1. In my opinion, you can actually greatly reduce or even eliminate global financial crises by jacking up the required ratios to make these banks play on the same playing field that other corporations do. There's no other corporation that would think of a 10 to 1 leverage ratio. You just could not do that. So why do we let our banks have leverage like this, even though the Canadian ones are more conservative? It doesn't make sense. We're just inviting another crisis. How many times does, Citibank go zombie and get bailed out?
And then what should that number be, in your opinion?
It should be more than 10%. So even though I'm saying Canadian banks are in relatively good shape, I'm much more comfortable with ratios more near 25%. And then you reduce all of these costs. It is a horrible cost when people are laid off, dislocated for potentially years. The economy suffers. Everybody suffers. We can solve that situation with a more conservative global banking system. And it's got to be coordinated. It can't just be one country operating at a time. It's got to be coordinated, and it's got to be much more aggressive than the Basel III proposals.
So how, and just, while we're throwing the scenario out there, how do you think that could come about? I mean, we can't even seem to get the European countries to cooperate with each other, let alone a global movement to try and get, banks to be more conservative. So how might that happen?
Well, unfortunately, probably the way it's going to happen is with this European crisis. Indeed, even the Swiss are exposed because their 2 large banks are so large compared to the Swiss economy that the Swiss regulators say, well, forget the Basel III. We're going to be much more aggressive. And I think that given the trouble that Europe is in right now, the sort of resolution in the future will be much stricter regulations and mandating that banks cannot have the leverage that they have right now or what is even planned under Basel III. That is a way to solve the problem.
Campbell, great insights. We might be a ways off for that, but we'll certainly be talking to you between now and that time that these things actually come through. Thanks so much for joining us.
Okay, thank you, Kim.
Campbell Harvey, J. Paul Stick Professor of International Business at Duke University.